Hello, everybody. On behalf of Civic Well, the Groundwater Exchange, and myself, welcome to Office Hours, the series that brings in experts to answer your questions. My name is Chris Austin. I'm otherwise known as Maven, and I publish the California Water News website, Maven's Notebook. For those who aren't familiar, Maven's Notebook is a website devoted to California water news. The website is updated 6 days a week with the latest water news gathered from around the web, my own coverage of meeting and events, and even breaking news whenever it occurs. I invite you to check it out at mavensnotebook.com. And while you're there, be sure to sign up for free daily email service to get the latest news delivered to your inbox every morning. And there's a weekly version too for those who might want less emails or a recap of the week's news. I also publish the Groundwater Exchange, which is the website that collects and organizes resources for SGMA implementation from DWR, the State Water Board, NGOs, and others. There are pages on projects and actions such as groundwater recharge, as well as pages on avoiding undesirable results, a video gallery, an intro to SGMA in both English and Spanish, and a SGMA implementation newsletter. I invite you to check it out at groundwaterexchange.org. There are more office hour sessions in the work, although nothing is scheduled as of yet. Sign up to be notified of future office hours and other events by Maven's Notebook and partners with the link in the chat. So today's session is being recorded and will be posted on my YouTube channel and on Maven's Notebook, and all registrants will receive a link to the recording plus all the resources shared in the chat in a follow-up email. Today's session is all about answering your questions. So if you have a question for Bryce or Matthew, please put it in the Q&A. And I am assisted today by Diana Vaz-Gonzalez with Civic Well, formerly the Local Government Commission. She'll be handling the chat in the Q&A. So with that, let's get started. Since their introduction last year, the California Water Index and California Water Futures have stirred controversy and even legislation against it. But what exactly are water futures, the commodification of water or a price tool for farmers? So I have Bryce McAteer and Matthew Payne from Westwater Research here today to talk about California water futures. And in the interest of full disclosure, Westwater Research is a sponsor of Maven's Notebook, and I appreciate their support. But that is not why I am hosting them for office hours. They are here because I know there's interest in this topic because the articles get a lot of clicks on Maven's Notebook. And I also want to point out that I include all the online articles and commentary written about California water futures that I can find, both for them and against them. And I don't filter the news feed based on who my sponsors are. Westwater Research, as all my sponsors, value Maven's Notebook because it is inclusive of multiple viewpoints. And every day I'm trying to link to everything. So if I miss something, send me the link, please. So today we're going to talk about California water futures, what they are and what they are not. And in today's Daily Digest, you might have seen the article titled, "Her Title Calls for a Crackdown on Water Profiteering." Deanna's going to put the link to that article in the chat. This article is about hedge funds buying up water rights, and this is an example of what California water futures are not. So what are they? I'm going to turn it over to Bryce and Matthew to introduce themselves and give us a brief presentation. Take it away, Bryce.
Well, thank you so much for the introduction, Chris. As mentioned, my name is Bryce McAteer. I'm a senior associate with Westwater Research based out of our California office. And joining me today is Matthew Payne, a principal with the firm, also supporting and based out of our California office. I'm going to attempt to share my screen now, and we can begin with our presentation. But we're very excited to have your participation in today's afternoon event and the office hours here. And the goal of today's presentation is to really introduce California's water market and give you guys a little bit of background on the state of the California water market and where it's going, and then introduce the new NASDAQ NQH2O California Water Price Index and the associated water futures, which were listed beginning late in 2020. So we're excited to provide this opportunity to discuss the water futures, the index in California's market, provide an introduction to these topics, and also answer the questions presented today. Now, Chris, just wanted to make sure I'm sharing my screen. Is that looking good to you?
Yep, you're all ready to go.
All right. Well, very good. So again, thank you all for your time. I want to start off first and foremost just with a little bit of background about Westwater Research. We are a water resources economics consulting firm. We've been around since 2001. And we have offices across the Western United States, and we support public, nonprofit, as well as private clients in achieving their water resources goals. Specifically, we specialize in economic and transaction advisory services, as well as water supply planning and resource management. Um, we support clients really anywhere west of the Mississippi and sometimes even east thereof. And we provide a unique service. Originally, when the firm was founded, we entered the area as providing water resources appraisals and water right appraisals. And that's expanded into a number of different sectors and areas where we support clients across the West. So I think to start the conversation off today, it's really helpful to actually provide some background on California's physical water market. As we began, we started talking about California water futures, but those futures are associated with California's physical transfer market, and that transfer market is really active and has been around for quite some time. Water markets, in fact, across the Western United States are quite common, and so I think it's helpful to begin with a little bit of background on those. Now, specifically, this chart focuses on the California spot market. In other words, single year transfers or single year trades. And the spot market is a relatively common tool that water users use across the state to help them match supplies with demands. Particularly, we see more activity in the spot market during dry years, like a year like this, when supplies are relatively slim. And so folks enter the market to help them acquire water supplies to meet their needs. Water market participants include environmental entities, agricultural entities, as well as municipal entities. Now, spot market participation, as we've observed over the last many years, has been increasingly dominated by agricultural buyers. Part of that has to do with how different water participants have been actively pursuing alternative transaction structures and water supplies. For example, municipal agencies have begun to focus a lot on longer term transfers as well as infrastructure improvements. And so the agricultural buyers have begun to increasingly participate in California's spot market. Now, the total volume traded in California spot market, as you might expect, goes up in dry years relative to wet years as folks enter the market to acquire the necessary supplies to meet their needs. Now, there are a number of market drivers and demand drivers that motivate participants to partake in California's water market. That includes trends in the municipal sector as well as trends in the agricultural sector. And I think one thing that we're also very familiar with, and there's been a lot of discussion about in the last couple of years, is SGMA, or the Sustainable Groundwater Management Act. I think folks are probably pretty familiar with the act passed in 2014. And this act requires that certain priority basins be managed sustainably by 2040 or 2042, depending on their relative priority. Now, as a result of SGMA and an analysis of the water budgets across the state, it's estimated that there may be up to 2 million acre feet per year of groundwater overdraft that will need to be corrected. And as agencies and new GSAs are beginning to address those issues, we're seeing increased activity in the water market as folks either enter the market to offset groundwater pumping restrictions in certain areas, or in some cases are even developing new allocations and trading structures to develop localized markets to help manage those imbalances between supply and demand. Now, the spot market prices respond to hydrology. As you might expect in dry years, prices rise, as well as trading activity. One thing that we observed in recent years, however, is that the variability between wet year and dry year prices is increasing. You can see that between 1990 and about 2010, the relative variability between prices in dry years versus wet years did not respond as drastically as what we've seen more recently. For example, if you look at 2013 through 15, which was a very dry period, and now as well in 2020 and 2021, which is certainly another dry year period. Now, the range of price variability is also increasing in dry years. You can see some drastic differences between the average prices and the highest observed prices in the market during recent dry year periods. And price variability is something that's difficult and challenging for water users to budget and makes it difficult to maintain stable year-to-year free cash flow. If you're an agricultural user in a dry year, you may be faced with supplemental water costs that are much higher than your normal water rates. Or in other cases, if you're a municipal user, municipal supplier, you may be having to enter the spot market to acquire the necessary supplies to ensure that your communities have water supplies to meet their needs. And so this is an issue that's difficult to manage. And so that kind of leads us into the discussion around the NQH2O water price index, as well as California's water futures. But before we get into that, I want to make sure we're aware of the conditions we have today. As you may be aware, California is facing historically low allocations in all of its major project systems, including the Central Valley Project System, its Fryan system, as well as the State Water Project System. Allocations range currently between about 0% of total entitlement up to 15% of total entitlement in those projects. Another difficult thing for water users is that we're in the third year of dry conditions. And so reservoirs that may have had carryover supplies in years past are beginning to dwindle, and those carryover supplies are relatively limited. This is also impacting our groundwater levels across the state, which is increasing pumping costs and physical access. And so along with that, as well as firmer demands from ag and municipal suppliers, water costs are driving higher. Now, the NASDAQ Velis California Water Index is a volume-weighted, location-adjusted average weekly price index for water transfers in California's spot market. Several years back, Westwater Research partnered with NASDAQ to develop the California's Water Price Index. One of the things that we do as a firm is track water transfer activity, not just in California, but across the Western United States. And that helps us understand where prices, price trends, and where water demands across the various regions where we support our public, private, and nonprofit clients. Now, it's relatively difficult in most cases to get a good sense of where prices are at, depending on your local region or your watershed. And so to help encourage price transparency and provide a tool for water users to plan around, we partnered with NASDAQ to develop the California Water Price Index, which provides a weekly snapshot of where spot market prices are at in California's water market. Now, the NQH2O index tracks current directional price movements in the spot market. Every market's a little bit different, and there are different regions that have different supply, demand, and pricing factors. And so the index is meant to provide kind of a smooth, volume-weighted, and location-adjusted average that is representing the directional trends of prices going higher or lower across the state. This index is published weekly. It's available online for free. You can simply Google it, and we'll also be sharing some links later on where to find that index. And it provides previously unavailable price transparency into California's water market, allowing municipal entities and agricultural entities and nonprofit entities to get a sense of where market prices and help them plan ahead for the future. Now, the index responds to drought. Price risk for all water users tends to be highest when water supplies are scarce. And the spot market price volatility observed in the index coincides with changing hydrologic conditions. Now, a lot of you may be very familiar with the National Drought Mitigation Center and its wonderfully colorful maps that are describing kind of the state of drought both in California as well as across the Western United States. And so we think this chart is really interesting in how the water pricing in California responds to drought conditions. So as you can see here, we've picked out conditions of extreme drought as well as exceptional drought in the state of California. And when more of the state is in a status of drought, we see water market prices rise. Increasingly, we've also seen more dry year sensitivity relative to prior years. So for example, if you look at the period from about 2000 onward, there's been an increased sensitivity and higher prices observed in response to drought relative to the prior dry year period of 2013 through about 2016. Now, the NASDAQ NQH2O Water Price Index is just that. It's an index. It's a tool. It provides price transparency on the directional trends of spot market prices in California. But there's an additional tool that we've been supporting and working on in collaboration with NASDAQ and the CME group, known as the water futures, and those have gotten a lot of headlines and discussion. So we wanted to introduce what these water futures are, what they're not, and how they can be helpful for entities that either participate in the water market or are affected by it. For example, a farmer in a water district that has a supplemental water purchase program, or a municipal user in a municipal water district. Now, futures contracts offer a way for participants in California's water market to offset financial risk associated with the physical water transfers by simultaneously engaging in separate cash-settled futures transactions. The water futures are not a way to buy and sell physical water. If you purchase a future or if you sell a future, you're not buying or selling an actual molecule of water. Rather, the futures contracts are a financial cash settled product that allows participants in the water markets who are actively buying or selling or acquiring or providing water supplies to also manage their price risk and manage around that in a financial manner. Now, these futures have a couple of specifications if you were to participate in the futures market. The prices of these futures are listed in dollars per acre foot, which is the typical convention in the water market in California and most of the Western states. And every contract represents around 10 acre feet. So if you were to purchase one contract, you'd receive 10 acre feet, or if you were to purchase 10 contracts, that would represent 100 acre feet. Now, like I said, these futures are financially settled. That means that if you buy a future, you're not going to receive a molecule of water or sell a molecule of water. Rather, it'll be financially settled or cash settled through an exchange. Now, an important factor is, how do these futures work, and what does it mean for a future to settle? And so the settlement price is the price at which a future settles, and the differential results in either a payout or a payment going to the counterparties. So if you were to purchase a future at one level, and then the future settles at another level down the line, that'll result in either a payout or a payment for the entities holding the contract. We'll talk about a couple of examples of that in a few minutes here. Now, the contracts settle on the third Wednesday of the contract month, and there are always 10 contracts listed that participants can purchase. Those are listed on quarterly contracts out about 2 years, as well as contracts for the nearest 2 serial months. To date, we've seen 15,000 acre feet of contracts traded, which is quite a significant milestone, and we're excited to see water users participating in the futures market to help them manage their price risk. Now, I wanted to walk you through a couple of examples. It may be, for folks who are less familiar with the futures market, or even are just trying to understand the water futures, it's helpful to kind of see a couple of examples of how this might work out. So we've created a few examples, including a long hedge as well as a short hedge. So here, we're going to consider ourselves as an almond farmer who perhaps participates in a district who has a supplemental program that in dry years, that district, on behalf of their growers, goes out, purchases water supplies from other willing sellers, and then provides that to their growers, which in dry years may be at a relatively high price. So if I were an almond farmer and I want to help manage that price risk, I may participate in the futures market. So as a farmer, I'm thinking around January 15th. If you're looking at that table on the left, that currently the futures are listed around $500 an acre foot for June futures. And perhaps I have a conviction that later in the year, in June, when that contract is going to settle, the price is actually going to be a bit higher, say around 850 or 900 acre feet, or $900 an acre foot. And so I would purchase a contract at $500 an acre foot with that conviction that prices are likely going to rise. And if those prices rise, I would get a payout that helps me offset my supplemental costs. So June 23rd comes around when the futures contract settles, and that futures contract settles at the value of the index, which in June is $858 per acre foot. As a result of that, the futures contract settled at a price higher at which I bought it. That price is about $358 an acre foot higher than what I purchased it at. What that means is I get a payout of $358 an acre foot, and that helps me offset my costs of participating perhaps in my district supplemental water pool. Now, what does this mean for a grower at the end of the day? Well, in the physical market, the grower probably had to pay, we'll say around $858 an acre foot to purchase their water. from their district, because in the physical market, which the NQH2O index represents, the prices were relatively higher, but I was able to offset that and lock in a net purchase price of $500 an acre foot, or a lower purchase price. And so it's helped me manage my operating costs and helped me manage my business. Now, an alternative would be in a wet year. So, for example, if we're an almond farmer and again, we want to do the same thing, we want to manage our price risk volatility. Perhaps we have a conviction that prices will go higher. The current futures that are due to settle in June are listed at $500 an acre foot. We purchase those. But what happens if the water year turns out to be wet or if prices drop? Well, in that case, the buyer, or in this case, almond farmer Joe, would pay $200 an acre foot towards that futures contract, or pay $300 an acre foot towards that futures contract, but still have a net purchase price of $500 an acre foot. In other words, in the physical market, prices dropped, and so the water district that was working on behalf of that grower was able to purchase water supplies at a lower price, and so I was able to pay that at a lower price, but the futures contract expired in a manner where I also have to pay out. But I've still been able to lock in a net purchase price of $500 an acre foot and help me manage that price risk volatility because I was planning on a purchase price of around $500 an acre foot. Now, there's a lot of different iterations of these examples, and we can talk about a lot of other things, for example, regional basis and other things. But hopefully this provides at least a great introduction into California's water market, the NQH2O index, as well as the water futures. And we look forward to your questions and being able to be helpful.
Okay, hey, we're back. Okay, excellent, thank you. Trying to answer some questions in the chat, some technical things, so sorry to be a little not there. Okay, okay, so great, thank you. Thanks for that presentation. You know, it's hard to wrap your mind around. It was hard for me, I should say, to wrap my mind around what these California futures are. And I think one of the key points to keep in mind, at least for me, is that this is no actual water is changing hands. So that's, you know, that's really important to remember. So in a year like this, I'm wondering how it would work. Like in the spring, when we had all the rain, a lot of farmers in the North State filed transfer notices to transfer, you know, most of them south of Delta. And then when the hydrology turned really, really dry, they rescinded nearly all of those transfers. So what happens in a year like this? How could water futures have helped? You know, it's also, I should say, in a drought year like this, it's hard to transfer water around the state when there's so little water moving in the system. You know, if I have a dry canal from point A to B and I want to send, you know, 10,000 acre feet down it, if there's no water in that in that canal, it's going to have a hard time getting there. So how could water futures have helped in a year like this?
Yeah, thanks, Chris. That's a great question. This is Matt Payne with Westwater. Hope everyone can hear me. There's a couple really interesting points you raised there. So the first point that you made is that the water futures are financially settled. They do not have any influence over or cause the movement of physical water or change of ownership of physical water. They're simply a tool for managing price variability. And so given your question about the impact of the dry conditions, there's less water moving around the state, there's less physical water to acquire, how are the futures used this year? Well, I'll think about this from the perspective of a buyer of supplemental water during dry years. So if I'm a buyer and I need to procure some additional water for this summer, and I was anticipating getting some supply from north of the Delta, and then those transfer applications were rescinded. If I had hedged appropriately, I would still be receiving a payout from my water futures transaction. So I'd receive a gain, financial gain from that transaction. And I could use those proceeds to either go find alternative supplies of water or simply to help out with the reality that I'll have a reduction in my crop yield and thus a reduction of revenue on the farm. So even if you aren't able to procure physical water as a buyer this year, having an appropriate hedge will provide you a financial gain to make the year less painful in real simple terms. Now, the other interesting reality is that even though there isn't as much water moving around the system this year, we are still seeing spot market transactions. There is water stored in groundwater banking facilities that we're seeing traded this year. And I do anticipate that we may see some water coming from north of the Delta through the Delta to the San Joaquin Valley this late summer or fall, albeit probably not as much as we have in other dry years. So hopefully that addressed your question, Chris.
Great, thank you. So if I wanted to participate in the water futures market, could I, if I wanted to? If I had money to, is it something like that?
You could. So the water futures, it's still a new market, and so it's relatively small. Small markets typically aren't accessible through like retail brokerages, like your TD Ameritrade account or your Interactive Brokers account. But there are really two kinds of participants in this market. One is called a hedger, and hedgers are farmers and water users in cities who have real exposure to risk in this market. If they want to participate, they can open what's called a futures clearing account with a futures commission merchant. And these are very large sort of financial institutions that open these accounts all the time and manage these accounts. And as a hedger in the market, there's sort of no minimum deposit requirements or anything like that. You can open the account, you can have it there ready to go so you can react when the time's right.
So, so you don't need to necessarily be like a farmer. Anyone can participate in a sense, but you would have, you go do this brokerage account, et cetera, et cetera. Now, full disclosure here, I have no interest in participating. I'm not into these kind of I won't buy cryptocurrency either. So, it's not for me. But it's just interesting that, if I had a sum of money that I was willing to put at that kind of risk, theoretically, I could. Now, if I kind of remember from our discussions before that there's like two sides to this, right? So if I think that the water is going to go up, in order to make this work, someone has to think the water is not going to go up. Is that correct? I mean,
that's not necessarily correct. So there do have to be two sides to every trade, right? And usually on one side is a hedger, which I described as farmers. On the other side will be a speculator who's participating for financial gain. But in some cases, those speculators aren't necessarily betting that water is going to go down. In some cases, they make a business around just providing liquidity. And so they are incentivized by CME, the exchange, to be providing two-sided quotes at all times, so a buy quote and a sell quote, so that there are always counterparties for hedgers who need to offset this risk to trade with. Now, those speculators may hold the position for a very short amount of time and get out of it quickly, but there is a way for them to sort of benefit from just being a liquidity provider and making sure the hedgers have someone to trade with.
Interesting. Because I think I only see water going up in price. So that's the way I look at it. Okay, let me see what we have on our question list here. Oh, before we move into the questions, can you tell me how a farmer, just run through a quick example again of how a farmer would participate. And then also, let's talk about how a municipal entity might participate.
Absolutely. Bryce, do you want to run back through the farmer example that you had on your slide?
Yeah, for sure. There you go. And Matt, would you like for me to handle that?
Go ahead.
Great. So
and I'll take the municipal one.
Perfect. So that's a great question, Chris. So, for example, right now it's a relatively dry period. Again, third year in a dry spell, being 2022. And a number of water districts, as well as individual farming entities, are actively looking out into California's water market to acquire water supplies. Now, the chart on the right it represents the actual NQH2O index from the period of January 1st, 2021 through kind of the late irrigation season or late summer season of 2021. And so we're representing real data, what NQH2O that actually did last year. And so pretend we're looking at last year. We're an almond farmer, and we have a conviction that one, it's going to be a relatively dry year. Two, that I or my district is going to need to go out into the market to acquire physical water supplies, probably at a relatively high price. And three, that I'm going to need to buy these supplies to make sure that I can irrigate my crops and sustain my farm. Well, if we looked at where futures contracts were around the very beginning of January, it was still beginning of January. It was still a relatively wetter period. It's the winter. There's some uncertainty around where allocations are going to be and where water supplies are going to be later in the year. And so futures contracts that were settling in June were actually listed around $500 an acre foot. Now, I, as a farmer, have a conviction that it's probably going to become a bit drier, and that $500 an acre foot price isn't necessarily going to hold. I have a conviction that the price is going to rise, and I, in the physical market, am going to have to pay my local water district, which is buying those higher priced supplies, a higher sum so that I can have that water. But I also want to make sure I can lock in a lower price and minimize the financial impacts to my business. And so in early January, seeing that differential between where futures contracts are listed and where I think it's going to be, I acquire a futures contract at around $500 an acre foot that'll settle in June, with the anticipation that in June, when that contract settles, the settlement price will be higher, and it settles to the NQH2O index and wherever it is in the third week of that month. And so now June comes along, we're entering the third week of June. And as you can see, as a result of allocation announcements, supply limitations, and other factors, supplies went down, demand went up. And as a result, prices responded as more folks entered into the market, demand was higher, and therefore prices responded and became higher as well, which is reflected in the NQH2O index. And so around June, the index price in the third week of June, when the contract settles, is $858 an acre foot. And so my futures contract settles and sells at $858 an acre foot. What that means for me and my business is that in selling that futures contract at a higher price, I made a $358 gain. Now, again, we have to remember that there's two sides to this. There's the futures contract side, the financial side, as well as the physical water market side, where I've participated in my district's supplemental water purchase program or something else.
Yeah, you have to set that part up, right?
Exactly.
Is
and
this
so
the usual?
Oh, go ahead.
I'm sorry. Is this the usual term of a contract? Is like 6 months? Are we generally going on like a growing season, or do they go longer?
Yeah, so that's a really great question, and I may be able to even jump up to the slide prior. And you can see in the second to bottom row there, we talk about listed contracts. And these are the contracts that you can acquire. And so at any given time, there are 10 different contracts listed. And what that means is that there's 10 different contract periods during which they settle. So there's always 8 quarterly contracts going out as far as 2 years from the current quarter, as well as 2 other contracts listed in the upcoming 2 serial months. So for example, in the upcoming 2 serial months, there would be a contract listed for June and July, as well as the other 8 quarterly contracts. So there's a total of 10 contracts listed. And so you could start planning for and acquiring contracts to hedge for as far out as 2024 at this point.
Okay, great. So tell us how a municipal entity might go, Matthew.
Sure, I'd be happy to. So much like farmers, municipalities are often buying and selling in the spot market. So they could, just like a almond farmer who's buying during a dry year, municipality buying in the dry year could use the futures to offset their costs. But I think probably a more interesting use case would be a municipal water agency that during a dry year is facing sort of mandatory conservation. And we've seen that the last couple of drought cycles, there has been mandatory conservation. And a consequence that has, among others, is that the municipal water agency has a reduction in revenue. And those agencies tend to be very sort of heavy in terms of fixed costs. So when there's a reduction in revenue, there may not necessarily be a reduction in their costs, and all of a sudden their budget's getting squeezed. So we've seen a lot of interest from some municipal water agencies concerned about that issue, who are motivated to look at trading the futures as a way to earn a financial gain during those extremely dry years when their revenues are down due to conservation, to kind of stabilize their revenues year over year. So that's just sort of a new and alternative way that a municipal water agency might look at this product.
Well, that's interesting. Have a lot of municipal agencies participated, or are they still watching?
They're still watching and evaluating. We do have one municipal agency that's in the process of opening a futures clearing account to begin participating in the market. Others are kind of watching to see how they fare. Now, one concern that we hear from municipalities a lot is, oh, well, we don't think under California state law, public water agencies can speculate in futures. That's partially true, although this isn't speculation, this is hedging as part of their normal business, but still it's unclear, right, if municipal water agencies can do this.
Yeah.
The approach that some are taking is participating through an entity that is allowed to do it. For example, lots of municipal water agencies have their own insurance companies, and those insurance companies clearly can do this. Some of them are part of mutual water companies. Mutual water companies are authorized to do things like this. So we're starting to see a lot of sort of creativity and innovation around getting into the market.
Yeah, I would say, because when you're a public agency, then you're spending public funds, and people can, that can get kind of dicey, I think. Okay, I want to ask one more question, then I'm going to go to our questions here. And about the chat, all the resources in the chat, I will send off in a follow-up email. I apologize, I don't know how to make it the chat copy and pastable, but I will send everything there. And I have some resources I compiled that on the water futures, and it includes some articles from the Pacific Institute, from the PPIC, and from Food and Water Watch. They have a fact sheet and also a note on some legislation that was passed, or not passed, I'm sorry, legislation introduced about these water futures. So one of the things I would like to have you respond to, and then we'll go to the audience questions, are in the Food and Water Watch fact sheet, they say that water futures gambling could increase water prices in the real world. Do you think it does, and why or why not?
Yeah, I think I have a hard time understanding how transacting in a cash settled instrument would impact prices for the underlying market. You got to kind of understand the way this product is constructed. Actual physical water trades and prices that are paid in physical water trades are used to calculate the index, and then the futures settle to the index value. So the flow of sort of pricing information is from the physical market to the futures, and not the other way around. Again, the futures are financially settled. They do not have any influence over ownership of water, location of water, use of water. It's just a way for folks that have already been trading water in many cases for decades to manage the reality that prices vary. So it's hard to understand how trading in the futures market could sort of have any sort of impact or echo effect into the physical water market and the prices that are being paid for that physical water.
Okay, great. If someone can tell me where I can tell the chat to become pastable, I'll do that. I've been clicking on everything around. Oh wait, one here. There's one little thing here. No, I don't. Oh, save chat, save chat. Okay, I think I did it, folks. Every time I do one of these webinars, I learn something new every time. Okay, let's go to questions from our audience. Let's see. Okay, is the index only for tracking, or is it also for investing choices?
Sure. So the index is purely informational. There's no way to trade the index. All the index is it's an informational tool that is published every Wednesday morning at 9 a.m. Pacific, and it gives a dollars per acre foot value that is calculated from spot market transactions and other qualifying water transactions that closed during the prior week. And in rough terms, it's a volume weighted average price of those transactions in the prior week. So it's purely informational. It's one tool that water users can use to understand current pricing in the market for water. There are other tools that they should rely on as well. But it's purely informational. There's really no way to kind of invest in the index.
Would you say an analogy of water futures would in the water index, or I say the price of water transfers in the water index would be analogy would be like the influence that the Dow Jones Industrial Average has over the stocks that comprise it, say IBM. Would you say that's an analogy?
Potentially, but I think it's even more sort of disconnected from the underlying market than the stock market, because in the stock market, you do have index funds and ETFs that folks can invest in, and those are designed to track the movement of the index. And those funds actually take positions in the underlying stocks. For water, there is no sort of water index fund or water ETF
Right.
that's buying the underlying asset. So I really don't, I guess, see as close of a connection there.
Okay. So next question, are there any quality parameters attributed to water and reflected in the cost and price, or is water just water? I think they're talking about the index there.
Yeah, sure. So the index doesn't adjust for water quality. And the primary reason for that is most of the transactions that are eligible for inclusion of the index have to be moved through sort of state or federal water conveyance infrastructure. And they have to meet the water that goes into those infrastructure systems has to meet minimum water quality thresholds anyways. So there's already sort of built into the transaction selection criteria minimum water quality threshold. And water quality can impact prices that are paid for water, but it's not as if it's a sliding scale. Essentially, if the water is of good enough quality to be introduced into those conveyance systems, it's priced with the rest of the market. It's not really a sliding scale. So based on the transactions that are included and eligible for the index, we're not adjusting for quality. They should all sort of be of sufficient quality to be traded in this market.
Okay, next question. Is there a public access database for spot prices of water in California?
Bryce, do you want to take this one?
Sure, happy to do that. So, really the closest thing to that may be the NQH2O California Water Price Index, which aggregates and assembles water market transactions on a weekly basis, applies adjustments, and then provides kind of a snapshot in time of directionally where prices are going. But that said, there's not necessarily a public register that has every single water market transaction listed and publicly available. There are some local markets and adjudicated basins that provide that information and have that listed online. But one of the things that we do as a firm, as Westwater Research, is that we track the water market. We work with public agencies and everybody else and have a really systematic research process to collect that information and help feed the NQH2O Water Price Index. And so the short answer is no, there's not necessarily a public register where everything is located, but the NQH2O index provides really a new sense of transparency in where the market is headed, at least in spot market terms, and where it's been.
Okay, great. Next question. How do water futures interact with California's complicated water rights?
Sure. In short, they don't. So the water futures are a financial product that settles to the index value on their expiration date. That's all they are. And then at that expiration, they trigger a financial payout. They don't have any influence over water rights or aren't based really on the water rights system. their value at the end of their term is based on prices paid for water in the transfer market. So there's really not much of a connection other than the value of the futures at their expiration is based on prices paid for actual water.
Right, we're back to no physical water changing hands. So no water rights
Correct.
to be involved. Okay. Next question. The ultimate goal of any market is to allocate resources, in this case, water. However, the market determines the allocation only based on the individual's ability to pay. The issue with allocating water by ability to pay is that how water is allocated is independent of the beneficial use for the basin for Californians. What recourse will the state have once the allocation is done based on a contract to purchase versus beneficial uses?
And there's no way that we can know the answer to that. I think it's so far sort of removed from the water futures, and it's really a sort of broader policy discussion that the state, is really kind of involved in. The water futures really have no connection or influence to those types of policy discussions.
Okay, yes, because no water is changing hands. So theoretically, anyone could participate in this if they had the right brokerage account.
Correct.
How does the volume of water future purchases affect the price on the spot market?
So yeah, like I've mentioned a couple of times, there's not really feedback back to the physical market from the futures. So the amount of futures that are traded doesn't, in terms of volume, doesn't really have any influence on spot transfer prices in the physical water market. So yeah, I'd say there really isn't an impact there.
Okay.
Where we do see volumes coming into play would be in the NQH2O index, right? As I've mentioned, it's a volume weighted index. So in the physical spot market, larger transactions in terms of volume have a bigger influence on the NQH2O index. And so the index matches more closely with larger transactions than with smaller volume transactions.
Okay, here's a good question. For the benchmark transfer prices, are those reported at the point of purchase, at the point of delivery to the original rights holder, or at the point of delivery to the purchaser? I think in this case, we're talking about the California Water Index and not the futures, just to be clear, because no water is changing hands. So it's talking about the price that you put in the California Water Index. That's how I interpret this question. So are the transfer prices reported on a consistent basis relative to the point of delivery? Do they include or exclude conveyance losses? Because I do know in the water index, you have the groundwater basins that are adjudicated, and the north of Delta transfers to south of Delta are included, and those are very different with for folks don't know, when you transfer water across the Delta, you have to give up some water for, carriage loss. You don't get the same amount of water that it starts out from. Okay, so do they include?
Excellent point. And I interpret the question the same way. So the index, the prices for the spot market transactions that go into the index are priced at the source of water. So that means they do not include delivery costs, conveyance losses, all those additional costs that participants incur to actually get water to where it's beneficially used. But your other point is spot on, Chris, that those prices at the source vary tremendously depending on whether you're in the Sacramento Valley or whether you're in Kern County, or whether you're in one of the adjudicated groundwater basins. So in order to report prices in a more consistent way, which ends up being kind of a price at banks, we make locational adjustments in the index. So the best example of that is the trades from the Sacramento Valley to the San Joaquin Valley through the Delta. When those trades occur, there is a conveyance loss. It can range anywhere from 20% in some years as high as 35%. So the way the index treats those transactions is based on whatever the Department of Water Resources is anticipating the loss factor to be for that year, call it 30%. The volume that goes into the index is reduced by 30%, and then the price is actually increased accordingly. So what you end up with is a South and Delta price at banks for those trades. And then similarly for the adjudicated basins in the other locations, what we've done is we've, based on the data we have, created a historical relationship between those transactions and prices in the San Joaquin Valley and adjusted those prices to make them representative of San Joaquin Valley prices. So there are these adjustments that are all intended to make the index reflective of water at banks. And the last point I'll make on that topic, the vast majority of the volume that goes into the index is surface water in the Central Valley, right? The other markets that are included are maybe, I'd say less than 5% of the volume. So really, they do not have a very large influence on the index, given that the index is a volume-weighted average price.
Yeah, and it's a very different type of transfer across the groundwater basin or across the delta. But that's interesting. I've always wondered how much. I knew that you lost water going across the delta. I was just curious how. So that's interesting to know. 20 to 35%. That's that's a lot. Okay, moving on to the next question. Over what period of time are the benchmark prices averaged over? Is it a rolling average or for a distinct period?
Sure. So the each weekly index number is reflective of transactions that closed during the previous week. And so it's calculated based on transactions from the previous week. And so it's really intended to be almost real time, at least as much as we can in the water market.
Okay, I see we're kind of moving into the last minutes. I'm going to kind of see if oh wow, and there's a lot of questions. So if we don't get all the questions answered, we'll send it out and the answers out in the email. But here is a question. Is Westwater LLC itself a market participant? Have you ever held a position in the market?
No, we're not. We don't participate in the physical water market or in the futures. Our business is solely sort of an advisory and information business. So, we don't participate in the futures. We're not there to manipulate the market, and we never will participate in the futures, given the fact that we're providing some of the data that influences the index.
Okay. Next question. What is the source of the trading pool quantities? For example, do you use state water rights allocations, which have been proven to be over-optimistic and thus over-allocated over time? Or is this from the state water project and thus we are trading on public water? This sounds like a strange mix of public and private market forces for a natural resource. Of course, I am not a hedge fund stock market expert, so. But okay, so source of trading pool quantities.
Sure. So the quantities that go into the index are based on actual transactions that occur in the market. So we're collecting data on the amount of water that was transferred, as well as the price at which it was transferred. And then those quantities of actual transactions get summed to develop the volume weighted price index. So we're not really looking at what is the state water project allocation, what's the CVP allocation. It's just wet water that's being transacted, whether that's state water or non-project water or banked water or whatever it may be. We're just kind of summing the actual transaction volumes. And yeah, the comment's right. We do have a pretty diverse mix of market participants in California's water market. I mean, it's everyone from conservation-oriented NGOs that are acquiring water to keep in the stream or deliver to wildlife refuges, to permanent crop growers, to row crop growers, to municipalities. It's a diverse mix of private, public, and nonprofit entities.
Okay, next question. I apologize for my loud cat. Trust me, it's my cat and I'm not torturing toddlers here, although sometimes you wonder. Okay, what about the other side of the coin? Pricing concerns of disadvantaged community water supplies. I heard a Valley Water employee say that the agency is paying the highest it ever has for water this year. Those increased costs will be passed on to ratepayers. Would there be a way that the trading system could help make water more affordable for health and safety needs?
Yeah, well, fundamentally, the whole purpose of the futures is so that an entity like Valley Water isn't paying so much during dry years, right? The whole point is to levelize those costs from year to year and hedge the costs, right? So,
Yeah.
like Bryce described in his example, if an entity had entered into a long hedge position at the beginning of 2021, they would have received a gain, and that gain could have been used to offset the costs of buying physical water. And so that really is the fundamental purpose here, to avoid those really severe sort of price swings from year to year that can not only impact disadvantaged communities, but also farmers who are facing those price swings. You know, it's everyone who's affected by it can use this as a hedge.
And, you know, disadvantaged communities, if they're on groundwater and they don't have a surface connection, then I'm not sure, you know, you can physically transfer water to them. You'd have to put it into, you know, pots or, you know, I mean, the bins outside their house. Sorry, my cat is in the way. Okay, next question. If the index reflects actual transactions, are those transactions validated, required to be reported voluntarily, all or some? In other words, is this a complete view of all transactions or a subset?
Sure. So it's a sample of all transactions. A number of the transactions are between private parties, and even if you can get, you know, some indication of price and volume, it's more difficult to verify them. But verification is really important to our process. Every transaction that's included in the index has to have some level of supporting documentation, particularly for volume and price, and also for it actually have been completed through the regulatory process and financially closed. The transactions that a public agency is party to, you know, it's much easier to get that level of verification because it's public information. And we do get some of that information from private to private transactions as well. You know, we do have private market participants that see the value and price transparency and participating in this process. And, you know, they will respond when we collect the data. So again, yeah, it's a sample. There are transactions that are missed, but the reality is that the largest transactions involve public agencies, and all of those transactions do get captured and included because it's public information. So even if we do from time to time miss a very small volume transaction between private parties, that shouldn't have a major impact on the index, given that it's volume weighted and we're capturing the vast majority of the volume by surveying public agencies. So yeah, so that's a sample, and there is some very rigorous verification around the data.
Okay, well, we're at the end of time and my cat is being a real pest. So didn't get to all the questions, so I will send the questions to Bryce and Matthew and to answer, and I'll include them with the follow-up email. The follow-up email will include all the resources in the chat and a link to the recording. So before we wrap up, Bryce, Matt, is there anything in particular you want to close with? Anything you want people to know?
Nothing further from me. I really appreciate everyone's participation and interest, and thank you for hosting us, Chris. Over to you, Bryce.
Yeah, same goes for me. I really appreciate the opportunity to have worked with you on this webinar here, and hope that all the participants had a good opportunity to learn a little bit more, not just about California futures and the NQH2O index, but also the underlying market and California's robust water market, which is a really important tool in years like this in a dry year. So we really appreciate the comments, the feedback, the questions. We appreciate the opportunity to sit with you all here today for a good hour. And if you have any other follow-up questions, don't hesitate to reach out.
All right. Thank you, everybody. And thank you, Bryce and Matt. And everyone have a nice rest of your day.
Thank you all so much.
Bye-bye.